Thank you, Matt. Good to see all of you in person again. I agree with Matt. The last time we did this, the overall tone shifted dramatically as we were 1 week away from the shutdown. I was also 8 months pregnant, so I'm a much happier person in front of you all today. All right, so if I haven't met some of you yet, my name's Claire Matten. I'm an advisor here with Sterling CRE. While we tend to touch all facets of commercial assets here at Sterling, my background is in industrial sales and leasing and investment product and in self-storage. So we will get into some metal and concrete boxes today. So even before the pandemic started, I think the overall trend we were sending out to the general public was we have a lack of industrial product across the state, especially in markets like Missoula, Bozeman, and Billings. And so that has rung true throughout 2021, moving into 2022. And I think the significant story throughout 2021 is some of the same things that Sarah hit on earlier. It's rent growth, vacancy and absorption, and then construction costs. I think steel packages are probably ringing in the minds of a lot of industrial developers after 2021. So to mirror what Sarah was saying about some national level statistics, industrial rent growth was reported in the double digits nationally in 2021. So Missoula didn't quite get there, but we are catching up very, very quickly, especially in Q4 2021 and Q1 2022. That rent growth actually helped to keep a lot of spec projects on track, as we saw construction costs escalate upwards of 18% in 2021. And so that demand, that industrial demand, gave some developers some breathing room as their steel packages fluctuated in pricing. And a lot of projects would have crushed some developers if that demand hadn't pushed rents to meet acceptable yield on cost figures. So in terms of users circling the market, we've noticed a rise in wet lab and R&D requirements, along with a lot of our last mile distribution groups that we've talked about in the past. Telecommunications and skilled trades are all moving to the front of the line in the search for industrial space, and that's all on top of the normal warehousing and storage space that saw rising demand starting in 2020. All right, so following the overall theme, we've seen vacancy for industrial product decline by almost 1.6% year over year, and that's now our vacancy at 4.5% is creeping lower towards that 3.8% that's being reported nationally. And at the same time, prices are rising for sales and leasing because of the scarcity and lack of product. If you take a look at the industrial transaction volume change over 2020, the sale transaction change is 110% in terms of number of sales. And a lot of these are attributed to some of the small bay product that delivered. Smaller industrial condominiums, anywhere between 1,500 and 3,000 square feet, were absorbed rather quickly in our market, so that upped our transaction level tick. And then you'll notice that trickled down also to the average sale price per foot. So we had almost a 15% increase in price per foot in 2021. And so what we want to talk about, especially here, is the lease rate trend that we're reporting. Remember, this encompasses all of 2021. So if we pulled this number just for Q4 2021 and Q1 of this year, I would say that the number would creep much closer to double digits, somewhere between $10 and $12 per foot triple net. Our industrial leases are hitting upwards of $12 a foot triple net here in Missoula, Bozeman, and likely in some Billings markets. The buildings that you're seeing, these $850 a foot triple net rates, typically have a little bit of obsolescence to them, so that could mean low clear height, lack of infrastructure, maybe some overbuilt office. So while those are leasing, there's typically something that isn't kind of catching up with newer industrial trends. So if you were going to build a new industrial spec project, you'd want to take a look at municipal systems available, water, sewer, things like that. A lot of users have internal fire suppression requirements that are difficult to meet if you're not on a municipal system. So a lot of developers have to account for a cistern pump system, things like that, which can impact development costs, which can impact land costs, all sorts of things like that. So that's something to think about as you move forward and consider spec development. So we lag national trends a little bit here in Montana, as we always do. And so I'm here to say that I really believe that we're gaining steam towards larger rent growth percentages as we enter into 2022. All right, so on the bright side, we're seeing quite a bit more industrial development in the pipeline the next few years, though I will say a lot of this speculative development that's coming online is already being absorbed. So if you own a piece of industrial property here in town and you're considering a spec development, we would encourage you, if possible, based on the calls that we're getting, to include more intensive loading. This means dock-high doors or truck wells if possible, excess yard area for storage or more parking, smaller office footprints. COVID really shrunk the office requirement for a lot of industrial users. 1 or 2 little offices, 1 restroom, that's really all you need for some of this small bay stuff. Clear heights, I would aim for at least 24-foot clear heights, with trends in newer buildings gravitating above 30-foot clear for larger scale developments for larger users. Users typically need at least 24-foot clear for racking purposes, so you don't have to build it that way. If you want to do something between 18 and 20 foot, that's fine, but you kind of start to minimize your buyer in your tenant pool when you start creeping underneath that 24-foot clear level. Small bays that were really popular in 2021, those have become increasingly attractive, and especially anywhere between 1,500 and 3,000 square feet. And if you're developing, keep in mind your site coverage. Light manufacturing typically is somewhere around 35% site coverage to incorporate for extra parking for employees. Think about truck circulation, all that sort of stuff when you're looking at development. All right, so cap rates for industrial product. 2021 multi-tenant distribution, manufacturing tenants with good credit, healthy remaining lease term, 5 or more years left on their lease. Those are yielding cap rates somewhere between 6 and 7% in Montana, with some deals pushing below 6% depending on the credit of the tenant. Single tenant, depending on credit and lease term, anywhere between 6.5 to 7.5 on cap rates. Credit tenants are pushing down to low 5s or below 6, depending on remaining lease term and credit of that tenant. Medical marijuana investment product, this kind of started to rise to the surface as I was getting ready to leave Phoenix maybe 5 or 6 years ago. Cap rates back then were 12 to 15% for this product. I think now it's closer to 10, and I think as it's become more widely accepted, there's still a high level of risk there. I think we're pushing below 10 a little bit, maybe somewhere between 8 and 10% on cap rates for medical marijuana grow facilities. So really what's driving these cap rates down is the scarcity of quality investment product here in Montana. Interest rates will continue to rise as we hear, and more industrial product will deliver, and so we might see these cap rates start to soften a little bit. But if you're an industrial owner contemplating selling, now feels like a really good time to maximize value. If construction costs continue to hold at these all-time highs, existing buildings are pulling in larger premiums as they remove delivery date guesswork for tenants and users.